Hey Alpha fam, welcome back to another episode of Alpha Commission. Today I just want to go over the Bitcoin chart. Of course, we obsess about the Bitcoin chart on this channel because Bitcoin leads the market. Your favorite altcoins are going to be able to pump if Bitcoin can break the resistance that we've been seeing, if it can pop out of this wedge, and if Bitcoin just decides to dump, then the rest of the market is going to dump with it. So understanding Bitcoin is incredibly important. And I don't even think it makes sense really to analyze all these other altcoins that are just kind of randomly popping off here and there as Bitcoin ranges until we see the macro direction of Bitcoin, because any of your coins can just suddenly be jerked backwards or just suddenly pumped out of nowhere. You might have no idea what's going on in the market until Bitcoin chooses a direction. And since we're just consolidating in this region, we really have to be aware of what Bitcoin's next move is, so that you don't get stuck in a position in your altcoins which are going to have huge magnification either to the downside or the upside of what Bitcoin is doing. So without further ado, let's get into it. Of course, I do like to start with our Gaussian channels. I try to give you an update on these every single day because I do believe that if this Gaussian channel turns red, and we're very close to that, where basically we start getting a negative curvature on the Gaussian channels, if they turn red, then that is going to spell disaster for Bitcoin. It is going to spell disaster for the crypto industry. And what we're going to see is just Bitcoin working its way down, getting stuck at the bottom of this tar pit, and then capitulating down potentially to the low 20,000s. You can check out some of my other videos to understand why that might be the case. However, the hopium is that as long as this channel stays green, which surprisingly it has, because it hasn't typically stayed green when price action has been this stuck to the bottom of the channel. uh, you know, Previously it would be red much before this. And so there is some type of strength built into this chart. And I would like to point out that although we are slowly drowning, and making these air bubbles that are getting bigger and bigger on the Bitcoin chart, where if they get too big, we're just going to get pushed down. Um, we are doing it in the context of a kind of healthy Gaussian channel. I mean, it's borderline, right? we are we are on life support here. It's borderline, but we're still technically in a healthy, Gaussian channel. And so, maybe we can consider when this turns red, it becomes the tar pit. Instead of this green background, if it turns red, then it's a tar pit. And maybe we're just at the bottom of fresh water right now, okay? It's fresh water. It's not totally polluted yet. We're just having a swim, tagging the bottom. And if we can get to this mid channel here, grab a hold of it, just like we kind of did here, right? Then we can pull ourselves back up. And usually what happens is you're going to retest the top of the Gaussian channel. Then maybe you'll come back down, and then you're going to have to worry about this all over again, okay? But the top of the Gaussian channel, if we are able to do that, is the mid $50,000 range. Which, if you've been watching this series, then you would know that that 50,000, to 56,000 dollar mark has been coming up in about 5 or 6 different ways. Whether I've shown you fractals, whether I've shown you different possible ways that the chart can play out using totally different indicators and totally different metrics, that mid $50,000 area just keeps coming up over and over again. And what I'd also like to point out is that look at the bottom of this Gaussian channel right now, 38,800. What have I been telling you time and time again? We can't go below 39,000. And again, I've been getting 39,000 from totally different methods, from fractals, from indicators, from different types of formulas, in order to understand that we can't break down below 39,000. Otherwise, this chart is going to tip over. And the Gaussian channel is just kind of reaffirming both of these concepts, both the top end and the low end. And what can happen if we get into that low end? Then, of course, I've shown you this before. If we start drowning in it and drowning in it, but we're able to stay off the bottom, then we can grab the middle and pop back up like what I just said. But if we lose it, we fall all the way down to hell, right? And you can see Back here, I showed you this before, which is when the channel turns red, right? And it becomes that tar pit, that toxic waste tar pit that's just dangerous to life, and we're still drowning. You can't swim your way back up. You're just going to get stuck. You're going to be stuck to the bottom of this tar pit, and you are going to drown, right? So there's, until we get into that kind of toxic area of this thing, maybe we are technically swimming in fresh water. And look here, look what we did back here in the past. We tagged the bottom, we got stuck on the bottom, we were able to swim all the way to the mid channel before we got rejected, okay? And of course, this is a different time scale, but you can still imagine that the air bubbles just got bigger and bigger after every move as we got stuck to the bottom of this tar pit. And as long as it remained kind of fresh water, this green color, we were able to tag the middle here. As soon as it turned toxic, we did just dump horrifically, right? And so, going fast forward to where we are now, you kind of can imagine that something might be happening similar to that, okay? And so this is your big warning area. This is your big warning area, assuming that the past has any relevance for the future. Your big warning area is going to be if we try to grab the middle and we fail to keep a hold of it, okay? And that's going to be around $47,500. We can just say a solid $48,000. If we aren't able to hang on to a solid $48,000, then most likely we're going to turn down again, and this channel is probably going to end up turning red. We're probably going to end up retesting the bottom of it and then falling to hell, probably the low 20,000s, of course. We've shown the math on how that's possible, but I don't want to, rehash things which we've already covered several times. And you can check out the video. Can Bitcoin really, crash to $25,000? I have a link on it in the description. But also, I have a case for the bull run, for a new bull run, where we could potentially, get to the $70,000. So right now we are on edge. And these are the key numbers that I would be looking towards, and because they have high confluence with other metrics, other styles of analysis. So this is becoming highly prescient, and I think $55,000, if we are able to break that, that $48,000 threshold, I think that we really can be talking about the mid $50,000. And if we're not able to get to break $48,000, if we get rejected by say 47,500, even if we made a noble attempt to get all the way up here despite drowning these past months, then probably we're going to get sent back down and probably even much lower than you would like. But the key level to look out for is going to be $39,000. And of course, I've been warning about $41,000, and that's just incredibly confluent with our current candles bottom open. So that means that there is something to this. There is a method to this madness, and please pay attention to those numbers. Let's just say 55,000, 48,000, 41,000, and then 39,000, right? And of course, if we break under 37,000, because you do see some wicks down here below these channels, which is just our price action. You don't even have to focus on the channel anymore. But if we do get a wick, below 37,000, personally, I'm just going to get out of the market entirely because most likely we're going down here. And of course, if we do just have one of these random wicks, maybe you could say 35,000, but it's up to you. It's up to you. Okay? Because we can always buy back in, right? So, basically the line in the sand is somewhere between 39 to 35,000. And of course, the big warning signals are anything below 41,000. We did see $45,000 today, and now we're at 44,350, and that is confluent with other factors that I've been talking about. First of all, let me go ahead and put on this fractal that I derived for you. And I think you're going to be interested in this fractal because it does seem to be still holding up. And, if whether you love fractals or you hate fractals, This one does seem to be playing out relatively confluently with our current price action. And so what do we see here? Kind of a reverse capitulation. We do see this type of a dip. We see a little bit of a pump to a low. You see this wick down here, and then a peak, kind of a mini peak, right? On on an overall dip, and then you see this kind of like scoop right here, and then a pop up, right? So, of course, fractals can't be perfect. Fractals represent previous price action. They represent the psychology of the market, the same bots, the same major institutions, the same players that have been in Bitcoin for however long that they've been trading. They're still in the market, in this or that way. More or less, it's not like new people just came in and totally replaced them. So their psychology is represented in these type of price actions, and sometimes in the reverse, right? Because it doesn't matter if they were scared and then they were greedy, or if they were greedy and then they were scared. They might have similar reactions, even if it plays out in reverse. And so, of course, this is a reverse, kind of a reverse or inverted fractal that I took. And so it's not going to play out exactly, but it does show kind of the psychology of this market. And what it would suggest, and this may or may not happen, but what it was suggesting is that after this kind of like a mini pump, after these two big pumps, there was going to be this kind of like a series of mini pumps, and that there would be a pullback within this region. And what are we seeing? We're seeing a pullback within that region, okay? And of course, I can fidget with this as much as I want because you don't trade off fractals. And if any of you are trading off fractals, shame on you, you're effectively gambling. Don't do that. Don't trade off fractals because you will get wrecked. People, the markets suddenly have new information that they didn't have during previous price action, and new information can change the game. Like that can totally change things. So as long as you're following the fractal, just use it as like an extra layer of, just call it half confluence. Don't even call it like a full confluence. It's just half confluence. But this extra bit of confluence has given me confidence while we've been trading this area that, yeah, we were going to see a peak, another peak, and that potentially we were going to have a pullback. So what did that allow me to do? It allowed me to psychologically prepare to get out of my position once we approached these previous heights that we had already hit, right? And since we did exceed this height and we were in this area and we were in this area, just like here, then I was able to get out of some of my positions. And it's a good thing that I did because, again, we hit 45,000. That was kind of the top of the range. And so it was, this fractal was suggesting a pullback. I looked at other factors and then I decided, okay, I'm not feeling worried. I'm just going to, temporarily take some profits. That's all. I don't think that we're necessarily going to just push up right now. We may have a couple pullbacks, and so I'm just going to prepare myself. If we do end up pushing up, then I'll just get back into my position. No big deal. And, but at least I took a little bit of profit in case we do have a pullback. And we've been in this range, so it also kind of makes sense. This fractal was suggesting this peak was going to be lower than this peak, which was lower than this peak, right? And this price action could represent up here. You don't know exactly. It doesn't fit exactly, right? Like this is way lower than this one. But it did suggest that we weren't necessarily going to reach these highs. And so again, this fractal just has been incredibly helpful to me. And you know, I love fractals, and I'll continue to show them to you, even though I do want to put that warning and extra emphasis on it. Don't trade off of them. Okay, just use it as extra confluence. Now, there is something that I'd like to show you before I continue on with the rest of our current chart. Um, Speaking about fractals, I do want to double check on the one that we've been following, this algorithm that I derived all the way back up here, and then I confirmed it down here, and I've just been tracking it all the way for the last, I don't know, it's been since November. So, wow, Wow, time flies. It's been almost 4 months of tracking this algorithm. So this is an algorithm that I basically derived myself, and you can basically see it here. You have an entry, you have a quick sell, you have a re-entry, and then you have a total profit center. Then you have a series of possible buy-ins and possible points of profit, but your real sell is going to be in this before you capitulate over into the next phase down, which is going to be a 20% dump. Okay, and the pump is somewhere between 10 to 20% typically, and so you have this range of dumping 10% and pumping 15%, and on each of these fractals they differ highly in how they internally pump, which accounts for the variability in where they are relative to each other. Like this one is higher than this one, and this one is relatively the same as this one below it. And it's because of the difference in the price of how they pump internally. So the internal price action can widely vary, but there's been one fixed factor is that they all dump 20%, 20%, 20%, 20%. And if we come to our current price action, I would expect wherever our apex is, we're going to dump 20% after that. If this algorithm, if this Bitcoin master algorithm holds up and is true, then we're going to dump 20%. And we could be breaking it. This was during a downtrend, right? Down, down, down. This is the first instance that's on an uptrend. And that could change the game. That could flip this fractal. That could, cut off the algorithm from its proper inputs. Something could change that this algorithm has broken down and it's no longer this bearish algorithm. And so even though I've been following it for 4 months and it still has played out perfectly. And look, the last time we were talking about it, I think we were in this region. And I was saying, okay, we're kind of reaching this box area that I've targeted, but I'm actually looking for this area. And look at what we've done. We just have climbed right up into that area. And so again, the algorithm that I created, as a kind of master algorithm for trading Bitcoin has just proven itself time and time again. And so don't dismiss the power of fractals, don't dismiss the power of the algorithms and the mathematics that are built into this system. It is important to analyze those things in order to build confidence. Of course, you do want to trade price action, but hey, I mean, I'm sure in a much more capable trader's hands than mine, they would have been, a multi-millionaire if they had been working with me on this. But unfortunately, I'm not that confident. I'm not that much of a gambler. I'm not that much of a trader. I do my best, but as I always say here, I'm a continuous learner. I'm not trying to be anybody's teacher or guru, or I'm not some type of a king or like any of this stuff. I'm just trying to share my ideas with you guys, and hopefully, other people in the crypto space can share their ideas with me, which happens a lot in the discords and other places. And so together we grow. But yeah, this was a multi-million dollar concept, and just on the shorts alone, I think you could have become a millionaire. And yeah, so I'm gonna use this to help build up my confidence, because as we go forward, I'm gonna continue making these ideas, and hopefully, I can keep producing ones that do have some profitability to them. But we're in this area, and although the internal pumps have all varied, it does suggest that we're kind of getting into that area where we're probably going to top out. As you can see, this kind of like a final sell area has never been too significantly higher than the first one. It's been equal to more often than it's been higher, or just slightly higher. And so I wouldn't really expect for our price action to get too much higher. Probably that $48,000 threshold that we talked about with the Gaussian channels would be the limitation that I would set. And if we break that, then it's just interesting that this fractal also, this master algorithm, right? Algorithm is a type of pattern. This mathematical pattern that I have created, um, could get broken if we break that $48,000 region, just like the Gaussian channels can get kind of flipped, right? If depending on if we hit that region. So that's an incredible amount of confluence and for that $48,000 region. And so now what? We have a ton of confluence for the $55,000 region. We have a couple different sources for the $48,000 region. And of course, I've shown you many times before why $39,000 is significant and $37,000 is significant. So again, these ranges are significant and you should be paying attention to them, okay? Should be paying attention to them. And if we do end up getting, let's say, 47,500 and breaking down, that would bring us down. Oh my gosh, look at this confluence. That would bring us down to $39,000. So once again, we're hearing that $39,000 level. If we just go by the top of this range, if we go by the bottom of the range, just where we're at right now, then that price action is going to be $37,000. So again, $39,000 to $37,000, that's the region you have to hold if you don't want to just break down. If we can hold that region, conceivably this pattern can, repeat itself, or some new pattern can take over. And anyway, if we do break down to that region, then I don't know, maybe we'll still be in a downtrend, and maybe we can still use this algorithm for a lower level, which might even take us into the low 20,000s, right? But that's getting a bit ahead of ourselves. I just wanted to follow up on that because I did want to have accountability for these concepts that I'm putting before you. I want to show you that I'm not just throwing BS at you, but that these things are playing out. And I told you, if you were buying down here, the place you were going to want to sell is up here. And so this is going to be the place where you want to start taking all of that profit from what you've gathered up here, based upon this pattern that I've been showing you for a couple months now, in which on my Twitter, I've shown since the very beginning when I first created it, like I've outlined the whole process. And so it's documented, you could have been trading off of this. And, this is going to be one of the major sell areas that you might want to consider because we're going to have to break through it and it's going to be tough. We don't know if we're going to be able to do that yet. But, if you wanted to hedge your bets, you might take a little bit of profit. If you're super bullish, well, there are cases to be super bullish in this market, but then again, there's also the case to be super bearish, and we are just in this consolidation area where it's more or less tied, right? This is the range that we're playing out, and of course, I've expanded a little bit on the golden zone just to incorporate this little consolidation area, and also this one, just give them a little bit of equal weight here. And of course, this one is basically an analogy to this one, and then this area right here is kind of an analogy to this one. But just in terms of how we hold these areas, right? And then, of course, the dead center is probably where you want to decide to stop buying, right? If we're just using horizontals, you want to stop buying because you really want to take your profits in these areas, and then you want to be buying in these areas. So if we do get smacked down, let me go ahead and put that fractal back on. If we do get smacked down, and and you're lucky enough that we get smacked down to around 39,000, right, which is kind of a natural pullback zone, which I would consider here based upon our diagonals, but just using our horizontals, if we do get smacked down to this 39,000, or you can see here, the fractal suggested we would dip down here, but actually we only held on to the mid channel. If we did end up getting pulled back to 39,000 or even this 41,000, I would consider those good spots to buy in just in case we have a bullish rally, just in case we have a bullish rally. And if we pop up and we meet resistance, take your profit, okay? Just like here, just like here, just like here, just like here. You don't have to just gamble that it's going to like lightning bolt up. Maybe we're going to get stuck. Maybe we're going to get stuck and we just can't break through like 46,000. So the number that I've always repeated that we have to get above is $46,000. And that would be confluent with that $47,000 to $48,000 that we do need to break to really bust out. Oh, and look at the fractal. It has a little kink right there, right at that 48,000. So that's interesting also. But anyway, if we are able to get our price action, it doesn't matter what we do in the next few days, but if we're able to break through this, and kind of consolidate in this area or do something interesting in this area and just hold it, right? Kind of like we held it over here, right? Then we're going to be out of this range. We're going to be out of this range and we're going to be now in a new range, right? Which is, who knows what it's going to be. It could get stuck here or we could end up, getting into these higher $50,000 areas, which is what all the confluence is saying. But I just wanted to put the fractal over on top of this golden zone area that we've been developing and the horizontals, just so that those of you who think more clearly with horizontals can kind of get an idea of what we're doing. I know some people are saying, you should be freaked out if we break below 41,000. I really don't think so. I think that the nature of Bitcoin is all these kind of flash wicks and stuff. And so there's a lot of fake outs in this industry. And so I wouldn't really be too terrified unless, again, we broke under that $37,000 region. Okay. And then in which case I would expect that we were coming back down to the bottom of this whole range, right? The bottom of the whole range, this red and blue. I would expect that we would be at least coming back down to there. But as long as we hold within this golden range, this golden zone that I've kind of carved out, above 37 and hopefully above 41, then I would just use this as your last chance to buy in for potential skyrocket in the market. And if we break down, of course, you have your stop losses, but that's up to you to do risk management. Again, when I say you, I'm not giving anyone financial advice. I'm literally just talking to myself. I'm alone in this room, a little bit stir crazy from looking at charts. And so I'm giving that advice to myself. And if you want to follow it, feel free, but that's not what I'm advising you. Do your due diligence and do your risk management. And please research those things before you trade, right? So let's see. Moving on, I think we can take this golden zone off because we understand that. Well, let's put it in the context of this pullback. So I have derived these pullback zones, and I showed you these before. These are derived using this line in particular is derived using a combination of factors, but I would say fibs are probably one of the most important things that used to drive it. And so you can kind of think of it more as a channel, just kind of like an area of possible resistance. And again, it's interesting how confluent it is with these possible pullback zones. I can't put a specific date on it, but what I did tell you is that anywhere between right now and the first week of April, I am expecting some type of major pullback and possibly a huge rejection. So if we do break down, pump back up, try to break through this is going to be the area that I'm really going to be wary about that we can just get smacked down. And it might already be happening, okay? Because you can see we did wick into this zone. And so personally, like I told you, I'm just using this all as confluence to take my profit here. And wherever we end up, if we do continue to keep pulling back, as long as we're within this range, then I am going to consider to buy back in. And again, under 39,000, I'll just probably forget about it personally. And under $41,000, I'm just going to be pretty wary. And so I've marked off these areas for you if you want to think about them. Just consider that we don't necessarily have to break through this region, okay? This region is really going to be the most deadly test for us. The most deadly test. And again, the number that I always tell you is 46,000 is what we need to get through and consolidate on top of. And if we're able to do that, you can almost be assured that we're having the bullish outcome. But if we get rejected in this region, don't be surprised. because historically, using these type of fibs and using the way that Bitcoin has traded in the past, whenever we hit a major fib like this, we are going to see a smackdown pretty hard. And let me show you. It actually happened here. There was one right here, and we had this smackdown. There was one right here, and we had this smackdown. And so there is another one coming up, and we're going to have a major smackdown. Now, this line actually extends infinitely. It doesn't show one particular spot, okay? Like anywhere that we had touched this, we would have been smacked down. And through the whole history of Bitcoin, whenever we hit these type of fib levels, we do get a huge smackdown, okay? So I want to be super realistic with you guys that that Gaussian channel, that tar pit model of us possibly capitulating and falling over, that is still fully in play. And if this was just a major fake out, I want you guys to be highly aware that that is possible. I'm not a moon boy and I'm not a doom boy, and I am positioning myself for the possibility of a bull run. I was a little bit more bullish here. I was a little bit more bearish here. I was a little bit more bullish here. And right now I'm 100% neutral. Okay, I've gone through the psychology of it. I've gone through the possibilities that we have coming up, and I just want to say, like, our final boss is right here. Okay, it's right here, and it's gonna be any time between now to the first week of April, probably towards the beginning of the first week of April. Okay, so probably within those first couple days, maybe even the 1st of April itself, because there's a lot of financial things going on at the beginning of the month, right? With the different institutions and different reporting from the government, they all have the 1st of the month. Very important, right? And then, of course, the monthly closures happen sometime around now to then. And so these closures, even though they come in before the end of the month, they can also influence how the market behaves and the attitude that gets changed. So are we going to see a breakout of this area, or are we going to see these rejections and then a breakdown? Stay tuned, but be very careful with your positions for the next week, okay? Be very careful, Alpha Fam. Take care of your positions, all right? And that is financial advice. Let's see, what else do we have going on here? Yeah, we can take a look at the wedge. I've been slowly modifying the wedge over time, but in general, it's held up. And it's interesting that the fractal actually plays to the top of this wedge. Again, most people are using some type of accumulation wedge, and I think that's fine. It's just that, um, just one moment. I think it's fine to consider the accumulation wedge. I think that is valid, but the one thing about it is that it's actually more of this kind of equilateral triangle thing going on here, okay? Um, I don't really, have a preference if people think of it as a, kind of like an accumulation like this, right? They're kind of seeing this type of triangle. Let's say like this. So they're saying like this, okay? Where price action is just coming up, 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 up. And then there's a pretty good chance that you can break up, and then there's also a pretty good chance that you can break down on these type of things. So it doesn't really matter what you call this wedge, but you know, the fact that the price action is going up does indicate that there is a lot of buy pressure. And so if institutions want to dump on us, then you know, this would be a great way to do it, after getting everyone to accumulate, and then they dump, and the price is being held pretty high. And so, of course, they can get the best price if they do dump. On the other hand, they might be accumulating because they think that price action is going to, skyrocket. And so they want to get in all these low price actions. And so they keep rejecting it down. They keep pushing it down. And then they just buy up, like the different institutions buy up, every time it has a pullback. And so we're not really sure which one of these is playing out right now, but just in my mind, I really don't think of this as an accumulation wedge. I more think of it just as the chart of Bitcoin itself kind of playing out, which is, you know, basically due to past price action, okay? And that's where we're getting limited. And my only concern is how can we break through these resistances? It's not really what's going on with these different patterns because it's all price action. It's all price action. Any pattern that you make, it's price action. And if the price action doesn't match the pattern, then, patterns it's just people's minds. You want to see things everywhere. You want to see circles, right? This might not be a circle, right? This might not be an oval, right? It, we want to see triangles. We want to see wedges. We want to see all these stuff. It just might not be the case that that's what's happening. It could just be that this is just different levels of resistance. And so we've got one kind of like right here, and we've got one, right here, and then we've got this one, right? And that these do seem to be kind of related to these other zones, which have some continuity to them, right? And so I'm just marking off the continuity of the resistance and the support, and that's how I do it. Okay, that's just how I do it. So you're going to see a lot of people mostly using horizontals, but for me, I like these diagonals. And so this is how I view it. I did think that it would be fairly difficult to get through this area, you know, and so I'm just flipping between log and linear. And, we wicked above it, which is good. We kind of punctured this diagonal, whereas previously we just barely wicked off of it, and then we heavily wicked off of it, and now we actually punctured it, which tells me that if we do come back down, and look, we're using this midline as support, which we hadn't done since back here, which, by the way, when we did use it as support, we got some pretty big moves off of that, right? And when we were rejected by it, we had some really huge rejections, right? Really huge rejections. So the fact that we broke down from it, we had a huge rejection, and the fact that we're using it as support again, hey guys, like that's pretty important, right? And what we're doing is, I think, just kind of like testing it out right now, right? And so if we see this type of choppiness for a couple days, even maybe a flash wick down here to, like I said, 39, and just kind of scaring us, it's possible we've flipped it into support, and we've already punctured this diagonal once. I think, the price action might say, okay, we've proven we can break through it and we can get to this $46,000 area. And then if we can consolidate there and we can break, and sit above this one or break above this one, which has also been that limitation, right? Then, we might just fly because there's not a lot of resistance here, right? So this is how I'm thinking, and one way that I've marked that out for you is by using these diagonal channels, which you can kind of, let me take off this wedge, which you can see we are now fully in the middle zone here. And what does that starting to look like to you guys? Wow, this is looking a lot like this, right? We are threatening to carve out that area. And yeah, this one broke above the middle, but look, it had a couple wicks also. So look, it didn't get it on its first try. It went up halfway, came all the way back down to the green zone, bounced off the green zone, came back into the purple zone, and got rejected off the top of the, in the middle of the purple zone. Tried again, bounced off the green, finally like poked through, got rejected, came back to the green, finally broke through the purple zone. And I'm making these analogies and I'm making these fractals to conceptually help us understand how our price action might, go forward. And so what are we doing here? We had a pullback. Oh, look at that. Look at that. We had a pullback, we broke up here, and then we had a pull back to the green, pumped up here, and now we're pulling back again. Where are we going to end up? I don't know. We could retest the green zone, right? But more likely, if we are seeing something incredibly healthy, more likely we're just going to pull back to around, this, maybe just even this top area. I mean, we could be seeing this type of breakout right now, right? I mean, we could see it within the next couple days. And then maybe, let me see, where's my pullback zone? Oh, that's too confluent. That's too confluent. Look at that, guys. Yeah, if we did in the next couple days just kind of like pump into this zone, I'm actually going to make this one kind of skinnier because this isn't the fib. This is just a zone. This is the fib. This is the actual fib level. And so if we did pump up to, there's that 47,000. If we did pump up to 47,000 and get rejected, I think that we could get significantly rejected, perhaps even come all the way down to, 43,000, 42,000. And if we were able to use this area as support, then potentially we could go on to our way, and maybe we have that bull run playing out, right? That bull run to the mid 50,000s, which would almost be identical to this type of a thing. And it's just way too confluent that would bring us to the mid 50,000s. Way too confluent. Way too confluent. Okay, guys. Like, there's algorithms, there's mathematics at play here. Okay, these aren't stupid people, wasting their time with their money. These are big institutions employing, formulas. And the only thing that I would say is that if we do come into this region and, we're just rejected right here, and we just kind of like middle until we get to that fib area, and then we break down, that's gonna be a really bad sign, okay? Like if we're not bullishly pushing up into this area, if we're just getting rejected at this horizontal until next week, and getting rejected there next week, and it's just not the greatest sign, especially if we get under this under this 41,000, and then for sure if we get under that 39,000. And then the bottom, of course, I told you is that 47. Then you can expect 33 and maybe even low 20s, perhaps, perhaps if history is correct. So, guys, that was a lot of information. Thanks for sticking with me. That was your alpha for the day. Stay safe and happy trading.